All you need to know about the Hyundai Motors IPO. Let's talk about the much-awaited Hyundai Motor India IPO. This is a landmark event, as it is the first time since 2003 that an automaker has gone public in India, following Maruti Suzuki's debut over 2 decades ago. Let's break down everything you need to know, from what makes this IPO unique to its broader implications for the Indian auto industry. This initial public offering is potentially going to become the largest IPO in India's history, as it is expected to raise up to Rs 27,870 crore. And globally, it will be the second largest IPO this year in terms of money raised. Retail and other investors can place orders from October 15th to 17th. Hyundai Motor India, the country's second largest passenger vehicle maker, has priced the shares between 1,865 rupees and 1,960 rupees. The IPO consists entirely of an offer for sale, with the South Korean parent company Hyundai Motor Group reducing its stake from 100% to 82.5%. Also, what's offer for sale? Well, it basically allows existing shareholders, like the promoters or large investors, to sell the shares to the public. And no new shares are being issued as part of the IPO, and the proceeds will not go directly to the company. Meanwhile, anchor investors, essentially your institutional buyers who buy significant number of shares in the company before it goes public, include BlackRock and the Singapore government's sovereign wealth fund in this case. They have in fact put in already 8,315 crore rupees. Hyundai's IPO comes at an intriguing time for India's automotive sector, which has seen significant growth but also faces challenges like the rising raw material costs and shifts in consumer preferences. Despite these headwinds, Hyundai has managed impressive financials, with the company posting revenue of Rs 17,567.98 crore in the quarter ended June 30th, 2024, and a net profit of Rs 1,489.65 crore. The company's revenue, in fact, is growing at a CAGR of 21%, and profits rising 45% over the last 2 years. In fact, Hyundai's market share in India stands at 15%, behind only Maruti Suzuki. The company is betting big on the future growth through a strong SUV lineup and expansion into electric vehicles, with the launch of its Creta EV expected in FY25. And the expansion of the Talegaon facility in Maharashtra is expected to further boost capacity and support both domestic demand and export growth. While the IPO has generated excitement, potential investors should weigh some risks. The competitive landscape is evolving, with players like Tata Motors and newer entrants such as Kia Motors posing challenges. Additionally, the company relies on its parent for certain components, with a 3.5% royalty fee impacting the overall profits. This IPO is not just significant for Hyundai. It's a reflection of the growing confidence in India's capital markets. Already, over $9 billion have been raised through IPOs in 2024, a clear indication of the market appetite. Hyundai's listing could set a benchmark, potentially driving more automakers and larger companies to consider going public. Analysts have given the IPO a subscribe for long-term rating, with its competitive pricing appealing compared to its rivals. Hyundai's strong financials, market share, and ambitious growth plans in both traditional and electric vehicles make it a potentially lucrative investment for those with long-term perspective. The allotment for Hyundai Motor IPO is expected to be finalized on October 18th, so be sure to keep an eye on Hyundai's stock performance after its listing, scheduled tentatively for October 22nd. Stay tuned to Republic Business for all the latest developments. Thanks for watching.